Do you know? OPEC plays an important role in the global oil market. The member states of the organization determine each country's oil production quota through negotiation to achieve the goal of maintaining a balance between market supply and demand and stabilizing oil prices. Therefore, it has a crucial influence on international oil prices. Currently, a total of 13 oil-exporting countries have joined this organization. However, Angola, as one of the member states of the organization, announced that it will withdraw from the OPEC Petroleum Organization after the meeting in December 2023. This has aroused people's curiosity. Generally, oil-exporting countries hope to obtain support from the Petroleum Organization and obtain more information. Angola, with its average economic level, has given up this support. Why did Angola choose to opt out of OPEC at this time? But China has become the biggest winner in this process. In today's video, we'll take a closer look at what's going on behind the scenes. Before getting into the topic, I would like to invite you to subscribe to the Asia Rising Star channel, which will ensure that you don't miss any of our exciting content. Let's get started now. At the meeting on December 20, 2023, Angola stated that it had differences with OPEC on crude oil production. OPEC originally planned to set its crude oil production quota at 1.11 million barrels per day, while Angola advocated increasing production to 1.18 million barrels per day. OPEC hopes to push up oil prices by cutting production, while Angola hopes to increase production to ensure foreign exchange earnings. Angola decided to withdraw from OPEC due to different development directions. In fact, many countries have withdrawn from OPEC in the past decade. Angola's withdrawal reduced the number of OPEC member states to 12. However, expert analysts believe that considering Angola's current and future oil production, its withdrawal will not have a significant impact on OPEC. For Angola, however, the story is different. Many outsiders believe that as one of the largest oil exporters in Africa, Angola's oil and natural gas exports account for more than 90% of its total domestic exports, which can be said to be an important pillar of the country's economic development. Since Angola joined OPEC in 2007, the country's current daily oil production is about 1.1 million barrels of oil, making it one of the smallest oil-producing countries in OPEC. Angola has been unable to produce enough oil to meet OPEC production quotas in recent years due to falling investment and a lack of new oil field development. However, once it leaves the organization, Angola will face greater risks from oil revenue fluctuations. Furthermore, a single country has much less bargaining power and influence in global oil markets than it does as a member of the OPEC collective. OPEC can influence international oil prices by coordinating the oil production of member countries, while countries acting alone face greater difficulties in this regard. Angola is a relatively small oil producer and has been hampered by the technological underdevelopment of its oil industry, according to researchers at an independent economic research company. Even now freed from OPEC quota constraints, it is likely to be difficult to increase production further. Therefore, Angola must rely on OPEC's influence to achieve development. However, their views ignore an important condition, that is, there is an important partner behind Angola, which is China. In fact, as cooperation between Angola and China continues to expand, Angola's oil industry has also made great progress with the help of China. China plays a key role in Angola's oil extraction and infrastructure construction, helping Angola increase its oil production and technological level. Although Angola once relied on OPEC's influence, now with partners like China, Angola has more development opportunities and autonomy. Therefore, the impact of Angola's withdrawal from OPEC on its development may not be as severe as previously stated. Through cooperation with China, Angola can better control its own oil production and market pricing, ensuring its oil revenue and economic stability. According to the plan, 50% of Angola's oil will be sold to China in the future. China has become an important supporter behind Angola. OPEC has been trying to control supply and influence market prices by adjusting member countries' oil production. But OPEC appears to be facing defeat in its fight to maintain oil prices. International crude oil prices have fallen sharply recently due to the deterioration of oil demand prospects in various countries and the surge in U.S. crude oil inventories. In recent months, oil-producing countries led by Saudi Arabia have been trying to boost oil prices by deepening production cuts. At the OPEC Plus meeting held in late November 2023, multiple OPEC Plus member states announced additional voluntary production cuts, totaling 2.2 million barrels per day, aimed at supporting the stability and balance of the oil market. According to U.S. officials, non-OPEC oil producers, such as the United States, are already filling the supply gap. According to OPEC officials, although Angola's withdrawal may not have a big impact on OPEC's oil supply, it will raise questions about the organization's cohesion and development direction. After Angola withdrew, the number of OPEC member states dropped to 12, and its share of the global oil market further dropped to 27%. In 2010, this share reached 34%. Since then, China has become the biggest winner in the recent changes in the situation. Why is this? Today, China has become the biggest beneficiary after Angola withdrew from OPEC. China is one of the world's largest oil importers. After Angola withdraws from OPEC, China will have more opportunities to increase its influence on Angola's oil market. Angola's oil resources are of great significance to China. At the same time, Chinese companies have gained opportunities in oil extraction and infrastructure construction in Angola. According to statistics, China's oil imports from Angola have reached nearly half of the country's total oil exports. This not only provides Angola with a stable source of income, but also gives China certain bargaining power over oil price fluctuations in the international market. Recently, the foreign minister of Angola visited China, one of the purposes of which was to deepen the relationship between China and Angola and sign a reciprocal investment protection agreement between China and Angola. This agreement was reached after 12 years of negotiations and covers all economic cooperation and investment between China and Angola. This agreement will greatly encourage Chinese companies to invest in Angola and provide them with the greatest degree of protection. Today, cooperation between China and Angola is no longer limited to the energy field. As one of the first countries to participate in the One Belt, One Road initiative, China also has investments in Angola's mining industry, fishery, and agriculture. In fact, infrastructure development is crucial to Angola's economic diversification. China has rich experience in this area and can provide assistance to Angola in terms of transportation networks, power systems, communication facilities, etc. These are important infrastructures necessary for the development of other industries. By cooperating with Chinese companies, Angola can obtain technology transfer, improve the technical level of domestic companies, and promote the modernization and diversified development of local industries. There is no doubt that this will provide an excellent opportunity for Chinese companies. Currently, nearly half of Angola's oil exports are sold to China every year, which has become an important security guarantee for China's oil. At the same time, the cooperation model between the two countries has brought hope to Angola on its path to independence. Under this model, other African countries have also seen China's strength. As a successful example, the Angola model provides a useful reference for China's cooperation with other African countries. Many countries have shown great interest in the China-Angola cooperation model and proactively proposed cooperation. This has greatly promoted China's going out strategy.